Good morning and welcome back to the Opportunistic Trader for October 3rd, a Wednesday, an expiration day, a ADP number today, giving a clue into what the monthly unemployment data will be. Sometimes it's right, sometimes it's not. Scouring the overnight. Oh, well, let's talk about, the trades just quickly. Again, they're not working too well. We actually almost were in the money yesterday at one point on our S&P trade. That trade turned, and we're going to stop out of this thing at 29.50, even though we have an upside call. So we won't lose that much money if we get up there, but just want to get out of that trade. And then the oil trade, obviously same type of thing with an upside. That's not really doing much over the last couple of days, so it's sort of in the same area. Looking at the overnight markets, China, I think, was closed again. I wish we had holidays like that, Vince. Getting like a week off from work. I mean, that would be nice, not to look
paid
at stuff
holidays.
for a week.
Paid holidays.
And then overseas, in other markets over there, really not much coming out of Asia. Going to Europe, DAX is closed, and FTSE and CAC are up small. Our market outperforming the world as always. S&P up $9.50. NASDAQ up $30, and bonds are back down, sort of where they always are at 140. Traded into the low 139s held, but yields again are, up around 308 on the 10-year. Powell yesterday was very hawkish. Said he was here to fight inflation and this and that. So the market sold off that about $5 and then rallied right back. So as always, nothing really means anything external. Gold had a nice day yesterday, closed a tad bit off the high, but had a nice day. Oil up slightly today. It really, with the market action, in S&Ps and whatnot, it should be scooting higher, but it's not. So maybe this is, a top in here, but obviously too early to tell that. And on the currency side, sort of quiet day across the board, unless there's some EM currencies that I don't really am looking at that are moving. But overall, that's sort of, the take from here, on markets, where they are, our positions and what we're thinking. Volatility continues to get crushed, and it's it's sort of the same mantra. I wanted to get into a couple of things, but I wanted to sort of open it up to you, Vince, to see if you have any thoughts on the overnight or any actionable potential ideas that we could look at, to make money here. So,
well,
good morning.
Thank you, Larry. But a lot of people in the chat yesterday were talking about, and I was talking to someone else, how weak the NASDAQ was. I don't want to talk positions here or biases, but I'm going to. And I think the market's rolling over. I don't know how you translate this as an active trade, but when you see all the stocks on the day as unchanged, I'm going to make a number up, right? Unchanged. But 2 days ago, the Dow was up and everything else was down. Yesterday, the NASDAQ was very soft and the S&P was up. I'm seeing more and more internal rotation, and I'm just wondering, as a stock index tourist, if we are not getting like an internal rotation of people trying to stay in stocks that are going to go down the least. And what I mean by that is, for people who aren't that familiar, is you have been, looking at correlations between the Nasdaq and the S&P and the Dow, and is it it's a rotation that, in the past we would say okay, people, the Nasdaq is soft and Dow is up. Well, that's people flying to quality, and it looks like when it's over, you're going to go to cash. It, has that been repealed? Like, does it not roll over? Like yesterday, I thought would be Nasdaq's leading, S&P would follow, and now people are rotating back out of the bigger caps and into the smaller caps again.
Well, they're all kind of up about
Should we
40.
just trade the correlations and not look for directions anymore? Is what I'm getting
Well,
at.
the direction is certainly, unfortunately for us at this moment in time, the direction is higher. The Dow made an all-time high. The Dow will probably obviously be up unless they spin the wheel this morning to another all-time high. The S&P is around an all-time high, and the Nasdaq is probably right in there too. So it's sector rotation. It's up in general, but overall, it just looks weird. Like, you just kind of today have to figure out, is today the day they're going to buy Russell? Russell was down 3%, or actually a little more than 3% in the last 2 days. Our S&P, again, we discussed this, doesn't have a 1% move, not even close, for multiple months. So, really, I think our job now is to figure out what they're buying, why they're buying it, and it's sort of, in a way, a day trade. So,
I'm just starting to I hear you. I'm just starting to wonder if maybe I should be looking more at because like I like to do arbitrage of similar assets, and maybe I should be looking more at when you say, like, for example, when you say I'm bearish from the S&P, then maybe I should be looking at an S&P Nasdaq arb trade, or correlation trade. Maybe short the S&P, buy the Dow, or put the S&P in the middle. If you're
Well,
bearish from
the S&P Dow has worked well. Long Dow, short S&P worked really well in long Dow, short
but
Nasdaq.
is it worth
But
it intraday though to look at stuff like that?
yeah, you could look at correlations all day. That's what we do here. Yesterday these markets started lower, then the Nasdaq was down 35, then exploded, went positive as the S&P was going lower. So these correlations are out there. You just have to figure them out. But today, looking at it, it looks like all markets across the board are extremely strong. The S&P is flirting around the highs that we made that expiration day, where we had the quarterly cash out, which we did well on. We'll have to look in this area and make some decisions. I do think the market is going to trade lower. It's just a matter of having the ability to have the timing to be in it, and the wherewithal to know when. And it does. The path of least resistance at this point in time, for whatever reason, is up. Again, the external mechanisms are really not there for that to happen, but the bottom line is they're piling cash in, maybe for the beginning of the quarter, and you just have to be leery. Interestingly enough, that gas, which is aside to obviously the equity markets, but that made kind of a high of this recent move. If it gets above 3.25, could break out. Some of the industrial, metal-based commodities all went higher. Copper is back up. Obviously, gold had a good day yesterday, and I wasn't looking at silver, but I'm sure it had a very good day yesterday. I don't know what that's a sign of, but maybe it's a sign of an economy that's clicking here, and I'm expecting the jobs number to be off the chart. On
Actually,
Friday.
yeah, and leading into the jobs number, which is going to be the, I guess, the cherry on top, whether it's moves the markets or not. Today may seem like a day that doesn't have a lot on board, but we actually have a lot of headline risk because there's going to be 5 Fed speakers today. Um, we had Charles Evans spoke at 6:30 in London. These things can move the market. So maybe the market is rallying, expecting something dovish out of these people. But Thomas Barkin comes in. He came in at 8:05. He's speaking now. And then I think we got one at 2 o'clock and one at 2:15. So Powell will, and then Powell will speak at 4 o'clock after the markets are closed. So it could be an eventful day in terms of surprises of people saying things that
I mean, if Powell didn't really move us, I don't know how any of his underlings are. But again, we'll obviously be on top of those times
Right.
that everyone's speaking, and obviously, if it's market moving, we'll let you know. I don't really see it, but again, I'm not 100% sure, whether or not that stuff is going to move the market.
Also, just wanted to give everybody an update. ADP data, employment data, comes out in about a minute and a half, and they're expecting about 180,000. So, got the 10-year note up
the
over the
job,
chart for everybody.
as my friends who I trade with every day say, the non-farm payroll has been plus 200 plus or minus for the last 10 years. It's like they create 200,000 jobs every single month. I don't know how it's possible. We haven't had a negative job creation number in 10 years. That's pretty amazing.
Yeah, I think maybe Bernie Madoff's in charge of the stats there.
I would say there's
When you see a 45-degree slope, you have to be suspicious. I mean, come on.
I know it's amazing. One thing I wanted to touch on, I was reading an article on the way in today, and it was talking about the underperformance of these asset managers in. I think the number probably just came out. Market's not even moving.
Yeah, the number just came out.
Didn't
It's
even move.
230,000 came out. They were expecting about 180.
Oh yeah, this unemployment number on Friday is going to be off the chisel. I think the unemployment number might go negative. They might. It might. No, everybody has.
Somebody
a job.
made a comment that we're above full employment. Someone made a comment tied to the Fed.
I would say we're well above or at full employment, but to get back on what I was reading, we're in like the biggest bull market in the history of the world, literally in time, and probably in percentage. And there are stocks that are down 40 to 50% in this bull run, and they're all asset managers like BlackRock, Blackstone. All of these companies are getting hammered, and it leads me to the point of between those guys and hedge funds, like why would anybody pay any fee for anything
Right.
when you can just buy the S&P yourself for no fee? And that's the benchmark that everybody's using, and the bottom line is there's no real secret stocks out there. It's not like somebody's being paid money to analyze stocks. You just buy Apple, Google, Facebook, and the S&P, and you're fine. You're doing better than any hedge fund. You're the best hedge fund out there. So I think it's an interesting time, and I think people have a risk appetite that's probably the highest that I've seen, even though it's quiet and under the table. And it's funny because they're doing it themselves, because obviously if these firms and hedge funds themselves, hedge funds like you don't want to even talk about it. It's like a bad word. Those guys have completely underperformed in every way for years and years and years. So I was wondering if you had thoughts on that or if you got a chance to read that article, but it's, it's going around and it's, someone hit me with it as well after I happened to have read it. And, I was wondering your thoughts on that and
No,
what you think is going on.
I didn't see the article. Send me the link, but I can add some direct color from a conversation I had with a guy. In fact, you and I were talking about this a day or two ago. I know a fund manager, and they're doing well, and they're actually doing well despite having some exposure in China that's going against them. They're on the long side of China, and the EM thing has been bothering them. But they have a signal that's they have, and they're not an algorithm firm, but they have a signal that warns them when the market may be toppy. Okay, and let's just say for this conversation,
let me stop you.
Yeah,
that signal has never gone off.
No, well, that's okay. Well, that's the side point. No, that's the side point.
When has that signal ever gone off?
No, but that's Larry. That's the side point.
For a day or two?
No, it hasn't gone off. That's my point. Like, they've got a good signal. They've got, look. They have
I don't think it's good. It's never been tested.
No. Okay. All kidding aside, it was operating in 07. It was good there. It called the February move. But here's my point to your comment about active versus passive management, or hedge funds as a dirty word. This signal, if they implemented it with their clients would stop giving them money, because their clients would just be basically using the signal, to trade their own S&Ps. So the point is, active managers who add value are even restricted from implementing that value, because it's kind of like freedom of information. But what I'm just saying is that, an active manager who tells his client to go to cash, or who says I'm going to cash, or I'm getting short, he loses that client, because then the client just, gives him 1% of his money to get the information, then puts the rest of it into passive money. But to the point about this cycle of passive and active money rotations, ETFs and good marketing have really hurt the hedge fund industry, or the 220 model. But I don't know when the cycle turns, but active management is what you need when the market drops. And I think it also coincides with something called value investing, which is something that people used to do, and we don't have that anymore. So, like Druckenmiller said, like you have said many times, price relationships, or price to news. There's no correlation, or there's no inversion. There's no relationship. Forget correlation. It's just being driven by machines that are they have a let's say they have a macro view that it can only go up. But I don't see how it can go up if you have the biggest generation of people, baby boomers, retiring. They're going to have to be selling their stocks to buy food at some point. Who's going to buy the stocks? I mean, how much can Switzerland buy?
Not if they're getting a return every year. They just take the return. They sell that portion, or they don't even sell that portion. They just extract that a portion to live on.
Right.
I mean, there's a whole generation of, our parents, and, I know my mother and her friends in particular have, the country club lifestyle off the stock market over the last 10 years, because they've made so much money. They're able to, basically stay in their country clubs and live a good lifestyle, because the market's giving them 10+% a year on their money, and they haven't worked in years. So, in 08, the opposite happened. People were blown up, and they didn't even know how to, get their next meal. And, country clubs were basically shutting down because no one could pay the dues. So, it's interesting. The market, in the underlying is fragile by nature by the investor, but in general, the market doesn't, all asset classes are going up, so nobody needs to sell anything. So, it's just interesting, that these managers and hedge fund managers, they're not seeing any flows because nobody's touching anything. Nobody's going to move a dime if everything is going well. But I do remember in '08, prior to the blow up, it kind of felt a little similar. People would come in my office, at Banyan and they're like, oh, this, that, we're making money with this guy and that guy. And I'm like, listen, at some point it's not going to go well. By 2009, all those guys were basically investing in us and freaking out because, in the tough times, it's very difficult to make money. So, we're obviously not in tough times. We're at a record high. We're speaking when the S&P is basically at a record high, and NASDAQ and the Dow. But when things get a little iffy, then you need a professional. So it'll be interesting. Maybe these asset managers and these investment houses do better when there's uncertainty and people have to move their money to the professionals over the Robinhoods where it's free trading and, they're giving you ideas and whatnot, and they haven't really been in business more than 3 to 4 years. So
right.
right.
And of course, we'd also have to acknowledge that the Fed has been and the government has been the therapist for every time we do have those 2% down moves and people run into start calling you and crying. It's the Fed that administers, the opium in the form of whatever it needs to stabilize the population. We're lowering rates and you get a free iPod. So.
But
before you can even get a
the
chance,
mantra has been different for a couple of years. I mean, the Fed is definitely unwinding the balance sheet. The Fed is definitely raising rates, and they're not buying assets. So it's their plan is going perfectly at this point. They're able to shrink the balance sheet. They're able to raise normalize rates or get them close to normal, and the market is making record highs. So for them, they're sitting there going, "This is awesome." So
I know. I do see that. I mean, if you want to give the Fed a grade, give them an A for managing expectations. I give them an F for future generation problems. I'm worried about my kids, and I'm not a panicker. I don't see how this unwinds.
Listen. I mean, you can't. The market has an insatiable appetite to go higher. So. What about 1 year when the market's actually down on the year? How can nobody's going to be able to handle it? It's going to be like Armageddon,
Larry, shorting will be made illegal, and you and I will be in jail for that.
Well, I'll tell you what. I remember the day they made shorting illegal.
You remember that?
Yeah, it was an expiration Friday, and they made it impossible to short bank stocks. And I used to do a lot of program trading, and I had a big basket to do on the opening. And I went to the firm that I always went to, Goldman, to do my trade. They used to lend me securities and all of that. And they literally said to me, "Sorry, you're not allowed to sell anything." I'm like,
evil
really?
Speculators.
I said, I can't borrow against your long. They're like, "Nope, we're not lending it to you." So that was one of the craziest up openings actually ever. I mean, the cash print was up like $100. It was pretty crazy, but it'll be interesting to see.
I have an active trading question because it's actually something that we can continue this in the chat room for everyone, but I really have a question I want to ask you for me, and it has to do with this correlation stuff. If I'm looking at the, do you mind?
Yes. No, I'm only kidding. Go ahead.
Okay. All right. So just work with me here. All right. I'm a student in this conversation right now. All right.
Uh-oh.
If I'm looking at three indices, the Dow Jones, the S&P, and the NASDAQ, and I believe that there's an arbitrage to be made to trade on these things intraday. Like for whatever reason, if the S&P is up, I'm going to buy the NASDAQ, or vice versa, whatever.
Well, listen, let me stop you just quickly.
I'm going to trade two. It's paired trade. It's not one trade.
I understand, but let me just stop you quickly because that's what we talked about yesterday. we used to do a lot of mean reversion in that trade. So if we saw the Dow down and the S&P up, we would buy the one that was weaker and sell the one that was stronger, and have the ability to watch that stuff mean revert and
Right.
make money. As I said yesterday, and I know I'm interrupting your question.
No, this is
You
answering
gotta,
my question too.
but
Go ahead.
you gotta go the opposite way. You
Well,
gotta
that's what I'm
find
getting at.
you for
The,
the
the
day. You gotta find what that computer is buying, and you gotta buy it. And what the computer is selling, you gotta sell now. You gotta also watch it, because you're gonna come off that trade once you see it not working. And like today, like I'm looking at the S&P up 34 basis points and Nasdaq up 37, and I'm watching slightly since I've been in, the Nasdaq acting a little bit weaker. It could be a fake tell, but maybe today, and it's worked the last couple of days, that the Nasdaq will remain weaker than the broad market
Okay,
in a
cool. And
catch up.
you've answered 50% of my question, and that's what I'm getting at. If you see a correlation and there's mean reversion, and you have your standard deviations and all that, and let's just take it at an extreme. The Dow is up and the Nasdaq is down. Maybe in the past, you'd have a mean reversion trade that might be profitable on the day. But as I agree with you, algorithms and what have you, and flows are basically more exaggerated and exacerbated, then uh, I'm not saying only to play mean reversion, because I play breakouts
No, we
as
can't. We
well.
can't play mean reversion at this point in
But
these
suppose you
trades.
play mean reversion over a week instead of a day, and this is not active trading stuff. That's why I'm asking.
Oh, then it could work. I mean, for sure. But
If you
I
stomach it,
can't even, with this type of trade and what I've seen over the last few days, you can't even manage this trade for an hour. It just
right,
goes,
right.
all of a sudden you'll see, like today it'll be NASDAQ sellers, Dow buyers. I personally think, like, if I was looking at it, maybe I would lean off the Dow and maybe buy S&P. But again, I don't want to put that trade on until after 9:30, when I see the stocks open and see what they're buying. And a lot of the queue is, believe it or not, is like Apple. Apple and Amazon. If they're up, then the Nasdaq has a chance to hang in. But once they start selling those names or names around that, it causes a problem, for
Okay.
the Nasdaq itself. So
Okay, so here's my ask. You've definitely answered my question. So here's my ask. See, I actually did a trilateral. I don't know what you call it, a three-way mean reversion with, believe it or not, silver, gold, and copper years ago, and it worked very well. Although I didn't get a chance to do it too long. So what I'm getting at is, I played mean reversion in only one asset, and that was these three futures. And now I'm asking you, if mean reversion isn't working on an intraday basis like it used to, then maybe uh, uh, to 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 flip it on you, like I'll play momentum and you'll play reversion, and we both make money in different ways. Is it possible that maybe it should be looked at as, when you get to your mean reverting levels, maybe that's time to go with the flow for the rest of the day? It's really not that different than you saying, uh, 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 the wave is coming in and people are just buying it and they're going to buy it for the rest of the day. You know what I mean? Like, if the Nasdaq is getting away from the S&P in your mind, maybe it should continue to get away from the S&P for the rest of the
well,
day.
then
And
listen, I mean, that's the discussion of our show pretty much every day, is divergences between these markets, and when and how are these things gonna come in. I like China as a long trade, um, versus the U.S. That I do not have that on, but I like that, but it's not working. So, you know, but that you're going to walk in one day and you're going to see the Shanghai up 5 to 10% in one day.
right,
When they do some type of fake deal, those markets going to, so you know that's a trade I like longer term. I wouldn't trade that day over day. You'll get your head handed to you. But, if you do that small and put that away in what we used to call back book, in your back book, that will reward you. That trade may not come this year, but it will come. The outperformance is astronomical. But, I just look at the markets. It just popped into my head, and I just see things around the market, and to see the market continually making new highs and going up every single day, with oil at 75 clean all day long. Trump was freaking out at $60. I mean, freaking. Okay.
Yeah.
I mean, he was calling out Saudi Arabia. Now it's 20% higher at least, and he's not saying anything, but they have no control of those markets. Brent's trading in the 85 handle, maybe even the 86. That thing's going to have a 90 handle. I mean, again, I don't know. Maybe that's good. Maybe, they think the economy's booming and they can handle that pricing. But
it's Jimmy Carter days.
Yeah, when you go to the
Except
gas
if the stocks
station
are
and
higher.
pay $5, you're not going to be happy. So
No.
no, it's going to be it's just, as you would say, it's like an inherent tax. It's like a tax on yourself
at the pump.
to buy gasoline.
But
so
it's a tax. It's a tax on people who don't own stocks too. When you think about it. So now that we've all right, politics, and I don't mean politics to be no. As it affects the market. No, as it affects the market.
We did it one day, Vince. I'm not doing
No, come on. We're not talking politics. Please.
I'm only kidding.
I hear you. Look, all right. So numbers are looking better than expected, which boosts Powell's authoritarian commentary on being hawkish. So from here to elections, I'm not saying that we can't sell off, but I see smooth sailing. I think elections are the next. Unless elections are a complete disaster for the Republican Party, I think it's steady as she goes. I'm just saying the black swan, although it's not black because I just identified it, is I think the next major event that we really should pay attention to are the midterms, because the Fed is being justified with their numbers by their actions. I'm just saying, I want to just not pay. I want to not pay attention to the Fed and start focusing on polls. That's where I am in terms of direction of the stock market.
No, I don't. Listen. I think the Fed is in the bank for December.
Right.
I also think they're gonna.
Thank you.
I think
that's what I wanted to say in a sentence. Yeah.
The Fed's in the bank, and I think that they're going to be tighter coming into next year, and. I think they were looking like mid-year at like 3, average like 3.18 mid-year on Fed funds. It could be higher, and he actually made a comment yesterday that if inflation and what's interesting is I think the big number out of this employment number on Friday is the wage number. So, that showed a little bit of an increase, and I think those wages are rising. Which is a signal to the Fed to be tighter. So, we'll keep an eye on those numbers. I'm just looking at oil, and it's like amazing to me where it is. It's just skyrocketing.
And if you're bullish, you couldn't get a pullback to buy it. Like that's how messed up it is right now.
Right, but the thing was, about a month ago when we were talking about it, and I was talking to Tracy, we couldn't.
You were bullish.
You couldn't make money on the long side at $67. It was just in below 70. Traded above 70, then came back in, and then sat for a month. And now the market's out. I think it'll fail up here at some point. But again, you just don't know. The number comes today at 10:30, and the number last night showed a slight draw. If they get a draw, who knows what's going to happen. But, at some point, when's oil going to affect the market? When is rates going to, like we were talking before rates went above 3 for the second time we're like, if it gets above 3, this market's in trouble, and the market doesn't care. Now oil's $75, market doesn't care. What's gonna make the market care? Again, we don't really know the answer to that question, but it would be interesting to sort of have a handle on it. So
I think it's something outside of the Fed's control, and I really think without putting any money on it in terms of trades, I think something exogenous is going to happen out of Europe, and I think it's going to be politically based. Like, Italy's really not a big deal compared to Greece was, but I think Brussels has their plate full. And with all the other stuff, somebody's going to do something stupid. Someone's going to do something stupid over there, I think.
Why do you say that Italy isn't anything like Greece, or Italy's economy is so much bigger? I mean, Greece is like, the funny thing is I went to Greece right before the debacle in Greece, and I couldn't believe the condition of that country. I should have shorted it just by, I felt like I had inside information. I came back, I was like, wow. That's really bad. No one was working. There were no shops open. And then they imploded that market. But, Italy, I think, has a bigger footprint.
A legitimate economy. The reason I say that is and that's, it's important to qualify that. Their budget, they want to have an increase of 2.4%. That's not a crazy, I'm just talking about the numbers, and then I'll get to the politics. That number in and of itself is not a crazy number. But the thing is, the rhetoric coming out of Italy is much more heated. And the other reason, and so that's the politics part. But to answer your question, they've seen Greece. They now have a map on how to handle Italy. That's why I say it's not as bad as Greece, because I think that they have their strategy laid out for them based on their experience from Greece. The reason I think that there will be a problem, despite Italy, in my opinion, not being as big of a risk, because they are on top of it. I'm not saying that the Italian banks aren't going to need a bailout. I'm not saying that the IMF is not going to come in and say, do this, do that, do this. I'm just saying that, they're ahead of the curve with the experience. The reason I do feel Italy is a risk is because there are human beings involved at the ECB, and they're focused on Brexit. And now you have three things that are demanding their attention: immigration issues, Brexit, which they declare as number one, and now Italy is just like a mosquito. I don't mean economically. I mean politically. As a mosquito, it's really pinging them. And Alan Hill actually wrote about this. One of our contributors. Not in such colorful terms. He's a Brit. He's very dry in how he writes. But I think that there's political risk that someone in the ECB is going to do something to undermine Italy and just kind of say, go to the corner, we'll worry about you later. And I just think that there's political risk in Europe that could affect the United States stock markets. I don't know. That's I think the Fed has a handle on everything other than the midterms. Right now, I'm looking for correlations between stock markets to play what we were talking about. But I think Italy is I think Europe has risk, and I think it's political, not financial. That's what I think.
Yeah,
for what it's worth.
I think that we have political risk coming into the election, so
I agree.
That could be the catalyst. Because
I agree.
I think people are going to be shocked. That's all I could say.
Larry, but you and I both know, right? Just being a little bit facetious here. Stocks will sell off 50 handles 3 days before the election, and then the GOP will get hammered in the election, and stocks will be up 52 handles, and we'll say, WTF? How are we supposed to trade that?
I don't know if that'll happen, but
neither do I. But
we'll have to keep an eye on that. Looking at nat gas is above $3.20, so that's interesting. It never ever holds that level, but maybe this time it will. Coming into a little bit of seasonality. Looking at the stock board, there's not a lot going on. Apple's up $1, Amazon's up $11, which is like Apple being up $1, and these stocks are up only 15 to 50 basis points. Financials look a little bit strong today, so maybe that'll carry the weight. They're up about 80 basis points, but there's nothing, nothing out there that's standing out to me on the equity side. It's interesting. I know Tony covered Nike a little bit into the Kaepernick thing, and Nike's actually looking a little bit weak. It's trading at $82, down from a high of like 86, 87, and that's really it. GE's back above 12, which the stock went down every day for like 2 years, but I guess they like this new guy. And, as we speak, S&Ps are on the high of the morning to the tick, trading at 39, 29, 39, 75, 40 now. 40 is trading, and that's kind of the high of the entire move, and we'll see, we'll see what they're thinking. But the cat is out of the bag in the sense that the number that will be put out Friday will be off the chart. They could probably have creation of 300,000 to 400,000 jobs with wage inflation, and I think that's very, very, hawkish for the Fed and bonds. And as we speak, what's the yield on the 10-year, Mike? Is it what?
308.
308. So until we get above 311, which obviously could be tomorrow or Friday, there's no reason to panic, but we could get, a significant uptick in yields off of that. So we'll keep an eye on that. The Chinese stocks have been closed, but the FXI was down 2% yesterday, hasn't bounced really much at all. So that spread's widening again. And, that's sort of it from here. It's an expiration day. We'll be active doing some option spreading. And do you have any closing thoughts?
The only thing I would add is in the chat, Bryn made a comment, and it's just so funny because if you remember back like 2 minutes ago, you and I were saying, high gasoline. Well, actually, I was saying, and you were quoting me, high gas prices are a tax on people at the pump, and et cetera, and how bad it is for the economy, et cetera. And there you have it. Bryn says in an almost joking way, but she's right. She said, last time crude was at $100, the media narrative was that it was a sign of how rich we are, that it was a good thing. So paying $5 for gas at the pump is a sign of how well we are doing, which will be the CNBC narrative. She's spot on there. So yeah, it's about how it's presented. Reality has been suspended.
Yeah. Well, hopefully we don't get up to those prices, but you never know. I wanted to quickly go over the schedule today again. Joe Vaclavic at 9 o'clock, Standard Grains, talking ags. 10 o'clock, I'm happy to say that Phil Flynn from the Price Futures Group will be joining us, a contributor to Fox Business News. Timely. And he'll be talking about the energy markets. And I know those guys are long-term and long-time bulls on oil and nat gas, so it'll be interesting at these levels to hear if Phil, is still as bullish as what he was. And then at 10:50, we have Andy LeBeau on Crude Inventory Day. We're lucky enough to get him from the Commodity Research Group. He'll be breaking down the numbers with Mike. And at 12 o'clock, we have David Floyd of Aspen Trading, talking technical analysis and the currency markets. And then at 1:30, we get to hear you again for those people that were not awake when Vince was up in the early hours, talking gold and markets in general. You'll get a chance to hear Vince again. And, right now, there's not a lot of volatility. There's not a lot of action. I wish we were really, really busy. It's been a very slow and not great start to the month. We're looking for things to change. We're hoping today is the day that happens. But we'll be in the chat room, scouring the markets with our experts, looking for opportunities for our members to, make money. Anything else, Vince?